Nearly $500 billion. That's how much 20 of the world's biggest banks have lost in their combined market value this year. To name a few, Bank of America down 24%, Morgan Stanley and Goldman both lost 20% of their value, Wells Fargo down 14%, Citigroup down 21%, and European counterparts faring even worse. UBS down 38%, Banco Santander and BNP both down around 25%, while Deutsche Bank and Credit Suisse have each lost nearly half their value. So what's to blame, and can this be turned around? WSJ banking editor David Reilly takes a look in today's Wall Street Journal and joins us now to discuss. Good morning, David. Great to see you. So is all of this a result of Brexit?
No, it's people, our memories are so short, we forget how bad things were at the beginning of the year. So bank stocks got clobbered in January and February when we were all worried about what the Federal Reserve was going to do, what was happening with China's economy. Oil prices, remember, were going down to $25 a barrel.
Right.
Then things calmed a bit and bank stocks started coming back. And then Brexit was like the second part of the 1-2 punch that just knocked them back down again.
Now, I know that recently a lot of big American banks passed stress tests, so I was sort of surprised to see that they'd also lost so much of their value. Are they worried?
Well, I don't think with the American banks it's so much a worry about their businesses right at the moment. It's more, are we going to go into a global recession? What is going to wash back over them? For the biggest banks, JP Morgan, Bank of America, Citigroup, they have big trading operations, big capital markets businesses. So those are probably going to start to slow with all the uncertainty. But then you've also seen a lot of smaller U.S. banks take big losses. People like Comerica, Citizens Financial, Regions Financial, and they don't have anything to do with Europe.
Right.
But what's happened is, and what's even worse for banks across the board, including those guys, is that we've seen long-term bond yields just plummet. So earlier this week, we had the 10-year U.S. Treasury at 1.32%, an all-time low. That's terrible for banks. They can't make money in an environment like that.
Absolutely. Now, why is it so much worse for the European banks? A lot of the issues you mentioned are global issues. So why is the picture so much bleaker?
Well, it's a couple of things. First of all, they're on the front line of Brexit. Right. And Brexit, it's not just about the UK leaving the European Union. This raises questions about the whole European Union. Will it hold together? If the EU, if there's any doubt about that, you have doubt about the euro, the currency there. So they're at the center of that storm. And then you have, if you look at it, a lot of investors think that European banks are not as far along as the American banks in terms of improving their businesses, strengthening their balance sheets after the financial crisis. So there's questions about their ability to weather a storm, and those questions are much more severe than they are about U.S. banks. Right.
Now, looking at the U.S. banks and looking at some of the repercussions of this, what will we see in the short term? A lot of disgruntled employees?
Well, I think you'll have some. If you're getting paid a lot of your bonuses and stock options, you're not going to be too happy. Although you might be happier if your options are pricing off of where their shares are now than where they were 3 months ago. I think the bigger thing for banks, both big and small in the U.S. in the coming months, and even you could say next year or two, is that there's just going to be this grind. And the business isn't that exciting, and super low interest rates. Everyone thought going into 2016,
the interest rates would come up and
things were going to change. It was going to be a new environment for banks, and now they're sort of looking back and going, "Oh my God, we're going to be stuck in this for another 2 years."
So, David, what's going to turn this around apart from interest rates going up? Anything?
Well, I think the first thing is some certainty over what happens with Brexit and the European Union and the fears about the EU subsiding. And then it's sort of what the question has been for the past several years, which is, when are we going to see growth, especially in the EU, Japan? Are we going to see stabilizing or growth pick up in China? Right. We need to see more global growth.
A lot of.
And same here in the U.S.
All right, David Reilly, thank you so much for that.
Thank you.